Guys, this is S&P 500 weekly technical analysis for the week of July 10th, 2023. That is from July 10th, which is Monday, through July 14th, that will be Friday. Last week we have seen that the ADP employment data, it came out better than expected, like more than 2 times what the Wall Street was anticipating. That was the reason that we have seen this a heavy bearish movement on Thursday, and the heavy bearish movement, the condition was open equal to high. So the S&P 500, at first it gave a very heavy gap down open, and after this the very heavy gap down, it remained below the open price, means there were very heavy bearish sentiments. Then on Friday there came this the non-farm payroll data, NFP data. Now NFP data, it was in line with the expectations of the Wall Street, and that was the reason that we have seen this the upward movement, the bullish movement in the entire stock market. However, in last 1 hour, 1.5 hours, we have seen that the entire stock market, the S&P 500, Dow Jones, Nasdaq, and everything. So these indices, they gave up, right? Now in the next week, what is going to happen here is that the next week, the much anticipated CPI data, the CPI, the headline inflation, and the core inflation, this data will be published on 12th, and then on 13th the PPI data will be published, the producer price index. This means that the next week, okay, it will be again, okay, a little more speculative and a little more volatile. So how this the ADP has impacted, and how the CPI and the PPI are going to impact the movement of the S&P 500, the Dow Jones, and the entire stock market in the coming week. So that is what I am going to discuss in this, the S&P 500 weekly technical analysis. Now in my previous S&P 500 weekly technical analysis, I mentioned this thing very clearly, that as soon as the S&P 500 moves up, or if it gives two green candles, or if not green candles, then two thin candles, in that case it will simply saturate the lower level technicals. The technicals on the lower level chart will be in overstretched condition. Overstretched condition means that even though it looks like that the S&P 500 is going to move up, but it will not be able to move up, rather it will struggle. It will struggle a lot before it can actually move up. So the upward movement was very thin, very limited, okay, and at the same time the downward movement was supposed to be handled very well by 4396, and after 4396 then 4371. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis, and the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Okay, now because the S&P 500 has closed below 4425 on the weekly chart, this means that there is some change, okay, on the weekly chart. So I will explain, okay, that change on the weekly chart. Other than that, the weekly chart means the big picture, okay, what is going to happen in a month or in a quarter or so, that is what is seen through the weekly chart. Then comes the second point of the agenda. Second point of the agenda is the S&P 500 support and resistance levels. For example, okay, last week 4462 was it was supposed to create, you know, very heavy resistance, very heavy hurdle for the S&P 500, and it did because S&P 500 failed to even hit this the 4462, and at the same time this 4396, it was supposed to provide this the necessary support to the S&P 500, and after that 4371, and in between these two, okay, there was this the 4425, okay. So our 4425 means it can hold, or it can try to move up, and below 4425 means that it will give, or it will show this the weakness, right? So similarly, I will give you the support and resistance levels for the next week. Okay. Then comes the third point of the agenda. Third point of the agenda is the S&P 500 technical analysis on the daily chart. Clearly on the daily chart, if you see the pattern, okay, of this the last candle, and not just this the last candle, okay, but these are last two candles, okay, then this is clearly so this is clearly indicating weakness, okay, weakness in the S&P 500, weakness in the Dow Jones, and the weakness in the this the stock market, okay. So I will discuss that. Other than that, other than that, on the daily chart there is a change in the MACD. MACD is now bearish, and the stochastic RSI, it is already bearish. Okay, so I will talk about that, what will be the impact, okay, of these two. Uh, and at the same time, okay, S&P 500 is still holding bullish through the moving averages and others. So that is the daily chart. Daily chart means what is going to happen, okay, in the very short term, like within a week, within 2 weeks or so. Then comes the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And in this, the last point of the agenda, I will discuss the probable movement of the S&P 500 from July 10th to July 14th. So what is going to happen in the S&P 500 from Monday to Friday in the next week, that I will discuss in this, the next point of the agenda. So just like last week, that 4462 means moving to 4462 or moving above 4462 as such is not possible if the S&P 500 gives one or two green candles or very little, candles, red or green candles. In that case, because that will simply saturate the technicals on the lower level charts, and the technicals on the lower level charts will be overstretched. That is why, okay, hitting 4462 or going beyond 4462, it was as such not possible. And we have seen that again, okay, this was the case, it has failed, it came down, and this. Similarly, I will give you the probable movement of the S&P 500, okay, for the next week. And if you look into this, my final update that I've given to my Patreon community members, then I've clearly mentioned that even though we have seen a good intraday bullish movement in the SP 500 and the entire stock market, still the MACD is trading bearish and is aligned with already bearish stochastic RSI. And as per the theory, these two are more than sufficient to bring bearishness in any stock or index, etc. However, recently we have seen a frequent change in the MACD, which is generally not seen or historically not seen in such a frequent manner, which further confirms heavy volatility in the market, in the stock market, and also heavy speculation in the market, in the stock market, against the standard market practices. And one more thing, guys, this S&P 500 weekly technical analysis, it will be a little bit lengthy, okay, and that is why, okay, I've created these the sections in this, the S&P 500 weekly technical analysis. Whichever section you want to watch, you can watch. Whichever section you want to skip, you can. However, I strongly recommend that you should watch this entire S&P 500 technical analysis, because each and every section is related to the other section, okay. And where I say the probable movement, it's not like that I will discuss the entire probable movement in the last point only, because I discuss the probable movement in all of these parts, okay. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community in order to get the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks, then I've given the link of this my Patreon community in the description of the video and also in the comment section. Now guys, I'm going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the weekly chart. This is the weekly chart. Let me write it down, weekly chart. W as in weekly. So weekly chart means that the one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week, right? So at first, the candle itself. If you look into the candle, it's a bearish candle, a good bearish candle, right? So, and secondly, the closing of the candle is almost, not almost, but is near to the low of the candle. Okay, so this simply says that there is some weakness in the index, in the S&P 500. However, the size of the candle is like 50% of the previous candle. This means that although there is weakness in the S&P 500, but this weakness is not as heavy as it was supposed to be. But that's not a problem. The problem is that in case of the Dow Jones, okay, Dow Jones simply gave almost an equal size of bearish candle, okay. So last week it was a green candle, and this week there is this the red candle, almost the same size, okay, in the Dow Jones. Now because generally Dow Jones drives the stock market, okay, entire this the US stock market, okay. This means that if Dow Jones is giving these the very heavy bearish sentiments or very heavy weakness, this means that the same weakness will be felt across all indices in the entire US stock market, right? So that is with this the candle. And now let's see what the technical indicators are saying. At first, the Bollinger Bands. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 is trading in between the upper band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands on the weekly chart, right? Then comes the moving averages. Because the closing of the candle is still above this the moving average, moving averages, okay, EMAs. Other than that, there is a clear fan out in the moving averages. This means that the S&P 500 is clearly bullish through the moving averages on the weekly chart, okay. Now comes the Ichimoku cloud. Because the S&P 500 is still trading above the Ichimoku cloud, this means that the S&P 500 is clearly bullish through the Ichimoku cloud on the weekly chart, okay. And yes guys, there is one more thing that earlier, okay, this was the case that as long as S&P 500 is holding and sustaining above 4155, it will remain bullish no matter what, okay. So that case is still there. Other than that, okay, because it has S&P 500, okay, again and again, okay, around 4065, okay, or so, it has given we have seen that there was a very strong support. This means after 4155, okay, it will be the 4065. Once the S&P 500 comes to 4155, okay, if it is able to sustain, okay, this the above 4155, in that case it can still in that case it can move up. But if it fills at 4155, then most likely it will be coming down to this the level, the 4065, right? Now let's see what other these are technical indicators are saying. So MACD. MACD is more than the signal. This clearly means that the S&P 500 is bullish through the MACD on the weekly chart. Then comes the stochastic RSI. Now it is changing and the K is less than the D. This means that the S&P 500 is bearish through the stochastic RSI on the weekly chart, okay. So other than that, yes, S&P 500 is volatile, okay, on the weekly chart, okay, and it is reaching to the saturated, okay, levels. So overall the thing is that the S&P 500 is bullish through most of the technical indicators, and except the stochastic RSI. Through the stochastic RSI, S&P 500 is bearish, okay. This means that the S&P 500 is 75% bullish on the weekly chart. Clear? So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community for the daily updates, the daily analysis of the S&P 500, then I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And the second point of the agenda is the support and resistance levels for the S&P 500 for this the coming week. Now the support and resistance levels is that we need to understand that in the next week, okay, the CPI data and the PPI data will be published. CPI and the PPI. Last month the Feds have not raised the interest rates, okay. So as of now we do not know that what will be the CPI data and what will be this the PPI data. But technically what we have seen, okay, earlier for last many months, that technically the CPI data means the inflation, headline inflation, okay, it is trading at absolute bottom for like 7 months or 6 or 7 months or so, or 8 months, okay, and a bullish reversal is due. So we were expecting this a bullish reversal, okay, last month itself and the last month, but that did not happen, and now it is trading at the 1976 levels, okay. and I think it has even reached 1976 levels, and it is trading around 1951 or 1955 levels. Okay, so it is trading at these historical levels, okay, where we have not seen the inflation, okay, trading at the absolute bottom for that long. Okay, anyways, so because the CPI data will be published next week and also the PPI data, this means that there will be very heavy volatility in the US stock market and in all of the indices. This means that we need to keep, okay, the support and resistance levels. Okay, so that is why in the bull side, okay, I have this resistance level at 4527. Okay, and in the bearish side, okay, I'm keeping the support level, okay, around or at this the 200 day EMA. Okay, that is around 4120 or something, but it is 4127 here. Okay, so 6% in the bearish side, fall 6% fall in the bearish side, and around 2% or 2 or 3%, okay, in the bull side. The reason that why 2 or 3% in the bull side, because the S&P 500 is already heavily volatile, okay, and trading at these critical levels, okay, technically. Okay, this means that if it goes up heavily, okay, very, okay, like very sharp, in that case it will simply, break all of these technical indicators. It will means it will force, it will compel all of the technical indicators to come into an absolute saturated situation. That is generally not seen. Okay, very rare. This that kind of thing is very rare. So the resistances we have 4527, then we have 4497, then 4462, 4462. Okay, again 4527. In my previous S&P 500 weekly technical analysis, I have shown you 4527, that when the S&P 500 was in absolute bullish run, it was moving up, moving up, then finally it came into the zone of 4527 and it gave up, and then it came into this the small correction. Okay, that is why 4527. So 4462, and then we have 4425. Okay, 4425. So as of now, the immediate resistance the S&P 500 is going to face is the 4425. Okay, provided there comes a gap up open. Okay, then the support is at 4396, 4396. Okay, immediate support, and then we have 4371. So as long as S&P 500 is trading and holding, okay, above 4396 or 4371, the S&P 500 has very good chances to hold and to sustain, okay, and to move up further, right? 4371, then we have 4343 intermediate support level, then we have 4310, 4310 to 427, 4291, this particular small zone, 4310 and 4291. Okay, this is a strong support zone or a very good support zone. Okay, because 4310 is the 61.8% of the Fibonacci retracement level. Okay, and 4291 is our golden resistance as well as golden support level. Now after this, the 4291, we have 4265. So from 4291 till 4265, it is a very heavy support. Okay, very heavy support. Means even if the S&P 500 even if it comes down, then also it will find very good support here, and after holding, okay, for like 4 hours, for a day, for 2 days, then only, okay, it will be able to come down. 265, then we have 4225, again very good support, very heavy support. 4207, very good support. 4185, yes, 4185, okay, again itself it is a very good or very heavy support. Then comes 4155. So 4155, what is this? The 4155, 4155 is the 50% of the Fibonacci retracement level, as well as it is our calculated, this the support as well as resistance level in this time. Okay, in this case it is the support level. This means that whenever the S&P 500 comes down, okay, whether it is able to hold or not, okay, The S&P 500 is expected to find very good and support, very heavy support at 4155. Okay, once it is able to find support and it is able to hold above 4155, then also okay it can reverse, right? After 4155 we have 4127. Okay, again this is almost the last support. Then we have the 200-day EMA. Okay, so as of now 6% in the bearish side and 3% or 2.5% in the bullish side. Now guys, I have this one more important information to share with you, that how you can join my Patreon community if you want to get these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as these the stock market opportunities in the premium stocks. I have given the link in the description of the video and in the comment section. When you follow the link, okay, this the Patreon page will open, and on this Patreon page you will see that okay, this is the daily S&P 500 updates for non-US Canada residents. This is the daily S&P 500 updates for US and Canada residents. This is the market opportunities and daily updates. So now the market opportunities are the part of the daily updates, and soon this particular tier, okay, it will be removed. So the stock market opportunities, minimum 5 to 10 stock market opportunities every week, now they are the part of this, the daily S&P 500 updates. So there is no difference, okay, in these two, other than the geographical locations. And if you notice that many people have joined my Patreon community, and they are getting these the daily updates, the daily analysis from Monday through Friday, each and everything. Other than that, they are getting these stock market opportunities, minimum 5 to 10 every week. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I am going to discuss the third point of the agenda of this S&P 500 weekly technical analysis. And in the third point, I am going to discuss the S&P 500 technical analysis on the daily chart. So at first, I'm going to discuss the candle itself. If you look into this candle, this candle is an inverted hammer, and this candle is of red color. Okay, red color inverted hammer. The same candle is formed in the Dow Jones also. Okay, and in the Dow Jones the candle has closed below 33,787. So as per my final update to my community members, that closing of the Dow Jones below 33,787 is clearly a bearish condition. Okay, so in this case, because the Dow Jones has closed below 33,787, this is clear that the Dow Jones has closed in a bearish condition. Other than that, the kind of candle the S&P 500 and the Dow Jones and the Nasdaq have formed, okay, this is a bearish inverted hammer. What does that mean? The candle means, this the bearish inverted hammer means bearishness, weakness, and that the willingness of the market to give up. Okay, that is what this the candle represents. So now, because the closing of the candle is almost equal to the low of the candle, this means that there were bearish sentiments at the time of closing of the stock market. Okay, and this indicates that we can expect a gap down open on Monday. Okay, although that gap down is not confirmed. Okay, the gap down would have confirmed if the open if the closing comes into the low position, means in this condition, closing equal to low condition. Okay, as of now closing is not equal to the low, but closing is almost approximately equal to the low. So there are chances, very good chances, that on Monday we can see, okay, there's the gap down open in the stock market. Okay, or irrespective of any open on Monday, we can see that the stock market or the S&P 500 or the Dow Jones, okay, they are trying to come down. Okay, in the initial hour or so. Okay, so means a bearish sentiment. Other than that, when you look into the pattern of these two candles, okay, one the hammer in the upright position, okay, and then the other hammer, okay, this is the downward position. This kind of situation, okay, often it what it does is that it creates, confusion in the movement, that what kind of movement should be seen. However, that the confusion comes into the picture when the candles are of different color. In this case, both candles are of red color. This means that both of these candles are giving, okay, or are telling us that there is weakness in the market, weakness in the S&P 500, weakness in the Dow Jones, and that these indices are susceptible, okay, for a fall, right? So now we have discussed the candle. Now let's see what the technical indicators are saying, okay, on this daily chart. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed in between the upper band of the Bollinger Band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands on the daily chart. Then comes the moving averages. Now surprisingly, by a few cents, only by a few cents, the S&P 500, it was able to close above the moving average, okay. Other than that, the S&P 500 is still trading, this the moving averages are still in the clear fan out pattern, okay. This means that through the moving averages, S&P 500 is clearly bullish on the daily chart, okay. Yes, there is a problem with the moving averages, so that I will discuss in the next point of the agenda. So now comes the Ichimoku cloud. So S&P 500 is still trading above the Ichimoku cloud. This means that the S&P 500 is bullish through the Ichimoku cloud on the daily chart. Now let's see what other technical indicators are saying. This is the MACD. Okay, this is so this MACD is what, okay, I was talking about in this the case, okay, closing this particular case and this particular case, okay. And I have warned my community members that, see, because of this thing, okay, you may see, okay, some surprise movement, and that was there in the last half an hour or 1 hour, okay. So MACD, when you look into the MACD is clearly less than the signal, okay. This means that the S&P 500 is bearish through the MACD on the daily chart, okay. However, this is not the entire picture. When you look into the stochastic RSI, the K channel is less than the D channel. This means that the S&P 500 is bearish through the stochastic RSI on the daily chart. Now, because the MACD and the stochastic RSI are aligned bearish, okay, both of these are aligned bearish, okay. This means that as per the concept, as per the technical concept, there must come, bearishness in the stock market or in the S&P 500. However, okay, if you notice that there was, this some change, okay, very sudden change, and then again, okay, very sudden change. This sudden change is not seen, okay, or not seen very frequently in the MACD. MACD is a kind of very stable technical indicator, okay. This sudden change clearly indicates that something is not right, something is not right in the stock market. So it came down, okay, bearish, then it turned bullish, and then again it turned bearish, okay. And now again it is supported, the bearish movement is supported by the stochastic RSI, means more bearish sentiments, right? Other than that, yes, it is hitting the saturation levels, okay, and all of these things. So overall, the S&P 500, we can say that 50%, 50-50, okay, it is in a 50-50 situation, okay, because MACD and the stochastic RSI are supporting bearish movement. Other technical indicators are supporting bullish movement, but MACD and stochastic RSI, the combination of these two technical indicators is very heavy, and it simply supersedes, okay, the other combinations, okay. This is how technically it works. That is why 50-50 only, okay. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community for the daily analysis and the daily updates of the S&P 500, as well as the stock market opportunities in the premium stocks, minimum 5 to 10 every week, okay, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And this, the last point of the agenda, is the probable movement of the S&P 500 for the week of July 10th, 2023. That is from July 10th, which is Monday, through July 14th, that will be Friday. So you must understand that the next week the CPI data will be published on 12th. CPI data means inflation, headline inflation and core inflation. Other than that, the PPI data. The PPI data will be published the next day. Okay, Thursday. That will be 13th. Now, as of now, we have seen that for last many months, the inflation, the headline inflation is coming down. That's fine. It's not a problem. But it is actually the core inflation that is creating the problem, because the core inflation is stagnant and it is not coming down. The core inflation is holding. Okay, that is why the stock market is a little fearful of this, the core inflation, and even the Federal Reserve Chairman himself has confirmed that the core inflation is the problem. Okay, so let's not speculate whether the CPI will be less or more, because as per the technicals, the CPI is already trading absolute these the saturated technical, the bearish, okay, technical levels. This means a reversal, a bullish reversal is due. See, the real impact of the CPI and the PPI will be seen on the respective days. Okay, on 12th, on Wednesday, when the CPI data will be published, the CPI data will be published at 8:30 a.m. in the morning. Okay, before the open of the stock market. Okay, so if you are my Patreon community member, okay, then I will give you my analysis on this CPI data and the core CPI data, and similarly I will give you my analysis on Thursday, okay, on this PPI data. Okay, and accordingly you can plan your trades, right? So as of now, okay, let's see technically what the S&P 500 is expected to do, and the behavior of the S&P 500. Okay. So on Friday, in last half an hour or in last 1 hour, we have seen, okay, a sudden reversal. We have seen a sudden reversal in the S&P 500 and in the Dow Jones, okay, and the Nasdaq. Okay. These are indices. As such, this sudden reversal is not a problem. Okay, but now the problem is that the kind of candle the S&P 500 and the Dow Jones and the Nasdaq have, okay, these indices have formed. This is an inverted hammer, and this inverted hammer is in the red color. Other than that, this inverted hammer was formed, okay, just after this the hammer in the upright position. Okay, however, that was also of the red color. This clearly indicates weakness and the bearish sentiments. Other than that, the Dow Jones on the weekly chart has given almost an equal candle of, so last to last week it was a very heavy bullish candle in the Dow Jones, but the last week it was a very heavy bearish candle in the Dow Jones. Okay, almost an equal, no engulfing, but almost an equal size, the bearish candle, the red candle. So that further confirms weakness and the bearishness. Okay, so this means that the S&P 500 and the Dow Jones and the entire stock market is susceptible for a fall, okay, or to give a bearish movement, okay, on Monday, right? Although there is a little doubt about on that part because of the closing of the candle above the moving average on Friday, particularly in this case of the S&P 500. But still, because of the Dow Jones, we are expecting that either there will be a gap down open, or irrespective of any open, there will be a downward movement. Okay, means a downward movement means the S&P 500, even if there comes a gap up open, then also it should come to like 4396, and thereafter it is free to do whatever it wants to do. Okay, but if it gives a gap down open, then the technical obligation is fulfilled. So if on Monday, if there comes an open which is below 4396, if there comes an open that is below 4396, in that case it will give it will give, you know, initial movement and momentum, bearish, I'm talking about bearish movement and momentum. Okay, in that case, yes, it may try to retest the 4396 and it may try to sustain above the 4396. If it is able to sustain above 4396 in the first hour, in that case it is good, it can hold. If it fails to sustain above 4396 in the first hour, then no, for the rest of the day that is not possible. Okay, in that case it will simply give up and will come down to 4371. Now 4371 must give the necessary support. If the 4371 fails, in that case it will be coming down to this the 4343 and then to this the 4310 and 4291. This is still due. Okay, remember 4310 to 4291, this is still due. Okay, so this will happen sooner or later. Okay, this will happen now. Okay, so this is there. Now if the S&P 500 is able to hold above 4371, then fine. Okay, it can see another day. Okay, but if the S&P 500 fails, and if it comes down to 4310 and 4291, then yes, 4310 and 4291 are going to provide the necessary, and this is the support to the S&P 500, right? Now it is expected to hold, the S&P 500 is expected to hold, okay, in this particular zone. If there comes more selling, in that case 4265. Okay, as long as S&P 500 is trading and holding above 4265, it is good. Okay, good means not this does not confirm that the S&P 500 will be able to move up sharply or so. Good means that the S&P 500 can still fight. Okay, S&P 500 can still try hard to sustain. Okay, and that it can still give a reversal, and that reversal will be limited to 4371 or 4343 or so. That's it. Okay, that thing. Any breach of 4265 level means now it is further going to come down to 4225, 4207. Okay, and these are levels. Okay, but as long as S&P 500 is holding above 4155, this means that the S&P 500 is can hold, and it is trading bullish in the short term. In the short term, it is trading bullish. It can go bullish. It can resume its bullish trend as long as it is holding above 4155. Okay, then we have some other these the levels, right? 4185 and 4155 will provide the necessary, and this is a very good support. Now comes this part, that if the S&P 500 gives a gap up open, after giving the gap up open, it is under technical obligation to come down. It comes down, it hits the 4396, finds support, and then again gives a reversal. In that case, it moves up to 4425. 4425 will create this the very strong hurdle for the S&P 500, and the S&P 500 must be able to move up above 425 and must be able to sustain above 4425 if it really want to go bullish. After sustaining above 4425, then the next hurdle comes at 4462, because the CPI data is going to be published on Wednesday early morning. Okay, and if the market movers, if the market manipulators think that they need more volume, in that case they can give an unusual movement in the 4462 side. Okay, and then people, they can again participate in the buying. Okay, because technically it is still trading bullish, right? So that will be there. And but if there comes an unusual bullish movement a day before or 2 days, means on Monday and Tuesday, unusual bullish movement, in that case that will be suspicious, because on Wednesday morning the CPI data will be published, because and the CPI data will be published. This means that there must not be such kind of rush. The rush means either the market manipulators, they know, okay, what is going to come, okay, or and that will be favorable, or they simply want to trap, okay, this thing, nothing else. But we are talking about the technicals. So technically 4425 is a must. 4425 S&P 500 must be able to breach, hold, and sustain above 4425 if it wants to remain bullish, or if it wants to move up. As long as it remains below 4425, it keeps on closing below 4425. Okay, the weakness will be there, the bearishness will be there, and the S&P 500 can further come down. Okay, it is simply so below 4425 simply opens the opportunity towards 4310 and 4291. But yes, this thing is clear that whatever is going to happen in the S&P 500, okay, we can divide it like Monday, Tuesday, Wednesday, Thursday and Friday. So like this, Monday and Tuesday, okay, no news and no such data. This means that S&P 500 can move, okay, whichever way it want to, okay, move. And if we talk about the technicals, then no, bullish movement is not supported, okay, through the technicals on the day, through the daily chart. Okay, this means that on Monday and Tuesday it must come down, simple, through the technicals. But if we talk about non-technical movement, then anything is possible. Then comes Wednesday, Thursday, Friday. Wednesday CPI data will be published, Thursday PPI data will be published, okay. So then on Wednesday and Wednesday onwards we are expecting some very heavy movement, okay, based on the data. If the data comes good, like if the inflation further comes down, okay, then fine. In that case the stock market can celebrate, it can move up. If the data comes if there comes an unexpected bullish reversal, then this confirms that in this month the Feds, they will raise the interest rates, okay. 25 bps is confirmed, okay, and if they want to, then they can even go for 50 bps. So the rate hike will be further confirmed, okay. Simple as that. So Wednesday, Thursday, Friday. This means that whatever movement, technical movement is going to come, okay, it will come on Monday and Tuesday, okay. Then from Wednesday onwards the data will take over, okay, the CPI data. Thursday the volatility will come down a little because because only the PPI data is there. And then on Friday, okay, whatever is going to happen on Wednesday and Thursday, that will impact the movement on Friday, okay. Again 4425 is must, okay, it is very important. S&P 500 must uh, close above 4425 and must sustain above 4425 if it want to remain bullish, if it want to go bullish, okay. Below 4425 or in any condition wherein the open is equal to the high, okay, means it opens and immediately after open it comes down, and this open comes below 4425 and then open equal to high condition below 4425, this confirms, okay, very heavy bearish sentiments, very heavy bearish sentiments, okay. And this will give or this will simply trigger selling or very heavy selling, right? However, if unexpectedly if there comes a condition like open equal to low, open equal to low on Monday for some reason, okay, and this condition comes in a manner, or this condition comes above 4396, there comes an open, immediately upon open it moves up. This means that there are unusual bullish sentiments. If there is a confirmed news, some good news, then fine. If not, then this means that someone is trying to keep the S&P 500 bullish even before the data comes, and that someone or those people, they are simply going against these the technicals, as simple as that, right? If there comes is the open equal to low condition, then this will be very much suspicious. Open equal to high, okay, I mentioned that the open and then it will come down, okay, then it will fall, right? But whenever it comes down 4396 and 4371 will provide the necessary support. Yes, 4371, okay. So in the bearish side it is 4371, in the bull side, okay, it is 4425. When it reaches and closes above 4425, remains above 4425, bullish. When it breaches and closes below 4371, remains below 4371, means bearish. And other than that, if you are my Patreon community member, then when the CPI data is published and the PPI data is published, okay, then I will tell you that what kind of movement we are expecting, okay, and what kind of movement we can expect, right? So guys, if you have not yet joined my Patreon community, then you can join my Patreon community in order to get the daily analysis, the daily updates of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks. And guys, if you have not yet subscribed to my channel, YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any questions, then please feel free to ask your questions through the comment section, and please hit like if you have liked this video. So guys, this was my S&P 500 weekly technical analysis for the week of July 10th 2023, that is from July 10th, which is Monday, through July 14th, that will be Friday.